All right, let's investigate momentum first. Remember, we're looking for a trigger on the 15 minutes, and this is the trigger on the 15 minutes. We got it. It would mean we have a level 1 right there at this point. Let's check the smaller internals. Very massive negative momentum on the 5. On the 3. On the 2, we could get a bit of positivity at level 1. And on the 30 minutes. I presume we would be short and or having a hedge at 88, I believe that was what was considered. We're now 87, 750. We will not move the hedge if we get, if we have an open hedge. If we get an open hedge at 88, I could of course move it a bit to 88, 750, but my technique would not be to move it. If I get an opening at 88, I'll take profit at the next internal support on the 15-minute time frame. I'll use a half size hedge, open 88 long, take it to 88,300, and then have another hedge above where the market does a top out, take it to 88,600, continue to hold the shorts. Either I get a rejection at level 1 or internal level 1. As a shame, we have a dot 1 here. A dot 2 and a dot 3. If this is a trend, it shouldn't rise above dot 1. It's very close to 88, so we probably trigger the hedge, and dot 1 can be moved to this point. $88,300. So I will take the hedge at 88, take profit at 88,300. I expect rejection. I know it's very hard to hold a position short when the market is moving against you. You just, it is inhuman. But if you're saying, well, you go by numbers, keep in your mind or keep your focus on the numbers. If you're seeing negative momentum on all the frames except the 2 minutes or the 1 minute, then this is just profit taking. Someone here was asking why would want to take profits. Others took profit at 88,155. They could be correct if they're using a good size, a strong size. If I'm using the small size, if I'm only using half a coin, 3/4 of a coin, 1 coin, I don't want to just take $1,000. Maybe if I'm in, say, at 88, 88,130, it does around $1,800, $1,700. If that is enough, wait for a bit of retraction, close it. I'm going in for the trade on half a coin, 0.75 of a coin to be comfortable, and I want to take profit at 83,000, 84,000, because that would make money for me. It depends, of course, on your risk and profit projections. But again, it's very important not to be freaked out of the trade. And in order to be not freaked out of the trade, you have to know how to manage it. In order to manage it, you must keep the risk very tight. You must keep the risk under control. So if I find the market is moving higher against me, I will hedge 88 because my risk is 1,800 or 1,700, all right, or even 1,500. And I will make money on the upside. And on a retraction, I will have another hedge on the upside, make more money on the upside. If I find the market has, for instance, if I fear or find the market has reversed altogether, I'll be able to close out gradually part of my gains on all of these hedges against my short. all right? If, as I suspect, this is not really going to be moving higher, but they're just going to be doing something like a 4A, 4B, and then a 4C, then I should have no worries on the market. The trend is down, of course, and then the market will simply continue the downside. When hedging, I'm using, say I am selling 0.75 of a coin, I'll just hedge 0.4 of a coin, half of the size, usually. Use the money to close out, reduce my shorts. Another hedge must be manageable hedge. So 0.35 of a coin. Use the gains to close another 0.1 of a coin of this 0.75. By that time, I'm say 0.55 of a coin. I will add again another 0.25 on the way down, and I'm still holding 0.75 of a coin. If the market moves quicker, next time I'm going to have another maybe sell stop, add another 0.25. I'm holding the full coin because at this point the move is finished. Remember, we said that could possibly be a B, and we could trade to the upside, a C, and then the market will crash. Okay, so earlier we were considering that B maybe will bounce out of level 1. We did initiate or say that B can drop below level 1. Cause confusion, this is a good place to long. Yes, yes. So if we're going for the shorts, we disregarded taking longs here. What we're going to be doing when we are hedging at 88,000 is simply taking that long, but at high levels. And it can go to 92, all right, to throw sellers off. It's called liquidity hunts. So if you're using a usable small size, you're able to trade both ways. It's perfectly correct. There's nothing wrong with it. And you end up making sometimes, not always, more money than if you just sell and hold. If you use this comfortable size and manage entries between the levels, and don't use stops, but use hedges to protect. So I want us to get out of the mentality that we're trading direction. We're trading volatility. If you were just in the trade to take the short and take it all the way to 84,000 or 82,000, you are trading direction. You are usually 1 time correct and 3 times wrong. Trading volatility means the other 2 times when you are wrong, you're able to make money on the wrong side, right? And still make money on the direction side. So we trade volatility and not direction. Traders chase volatility. They do not chase or speculate direction. And volatility is right directly related to the strengths in the momentum plot and to the pivot levels that are outlined here before us on the 15-minute chart, because these are the volatility projections for the day. So to recap, the market's still down. I believe we are really going to 81,000. The earliest I would consider to take profit is 83,000. Even if the market breaks my level 1s, I'm using a comfortable size. Hopefully, I will take the long just $300 higher, all the way to 50%, all the way to resistance 1. I'll be trading the pivot to resistance 1. Focus very closely on the internal pivots on the 15 minutes. And use a manageable size, 0.35. You make money on the upside, reduce at least part of the shorts here. All right, so that gradually, by the time, assuming this does another higher head, gradually by the time we go to another higher head, I am only holding maybe 0.65 of a coin, 0.55 of a coin, and I can add another 0.25 short and take it down. You have to be very patient. This market can, seriously, markets, not only this market, can drift here in this segment for hours. Right? So if I have my entries on the station for hedgings and targets, and my entries for taking a profit, of course, way down for the shorts, I'm all right. When I'm doing hedges, I just do 2 hedges or 1 hedge. That's all. And I have an alert from the station to my mobile phone that after the market moves above my hedge target, I get alerted. So I get back towards the screen and see if the market has retracted, going to be doing higher. I can move higher than retract, and then I have another hedge. But watching the screen 24 hours a day is, of course, impossible, and it will drain your focus. and of course will not be able to perform correctly. All right, I hope that covers it, and I wish you all the best of fortunes on the trades. I believe this brings us to an end of issues today.